Good afternoon, everybody. Welcome back to Market Insights with Linux, and welcome to this new video. Also, if you're new to this channel, I thought a little bit today about what video I wanted to make regarding, the markets at this point of time. I thought about Tesla because there's some interesting things going on with Tesla, of course. But in the end, I opted for a full market analysis, right? So that's what we're going to do in this video. Our primary focus will be on the S&P 500, right? So we're looking at the this is the index. This is not SPX, I think. So that's going to be our primary focus in this video, but we'll talk about some news that I have to the left of me, and we'll talk about some of the effects that that's having across markets, right? So we'll take a look at gold, we'll take a look at the volatility index, and potentially, most crucially, we'll take a look at oil and oil prices. We'll first do that on the higher time frames, and then I'll zoom in a little bit here on the S&P 500. And we'll talk about what's most likely so that's what we're going to do. I'll do a brief recap of what I said last time as well towards the end. But first, let's talk about the news. What's going on right now is obviously that we're awaiting the Irani response to what happened 2 nights ago. And there's a lot of different possibilities. At this point of time, the market seems quite optimistic. All right, if we're taking a look at the S&P 500, you can see the open was quite strong, and that's especially visible right here on the 1 hour time frame. So there's different things that can happen, but at this point of time, and I'm also reading some news right here that Iran says the response will be proportionate. Maybe the market sees that as a little bit of a de-escalation, because what is proportionate, and that's, that doesn't seem like an escalation. That seems like an eye for an eye, but an eye for an eye is not an escalation. I would say maybe a life for an eye is an escalation. So that's just a response, of course. And then we also just got some news after some Federal Reserve meetings, which is something completely different. But that, potentially a rate cut is on the table for July. Now, I'm not sure if the probabilities have already changed. So quickly looking it up right now. But yeah, it seems like the probabilities have actually changed. Right now, the market is seeing a 25% probability for a rate cut in July, which was definitely not the case before. But in general, there's a lot of fundamental uncertainty right now. Like I said, the market is pricing in that that the reaction will be proportionate, and that we will not see an escalation. An escalation, for example, would look like the closure of the Strait of Hormuz, right, which is one of the main passageways of a lot of oil. And that would most likely, I don't think that's priced in. I mean, gold is kept to the upside by the range. It's still within the same range that it was in since, the 23rd of April. So that's not a signal that there's more uncertainty or more unrest. Volatility index is also higher since the 13th of June, but has also not increased. Oil prices, which will definitely increase, and that's bearish if the Strait of Hormuz is closed, they're also relatively stable and still at the same levels as they were the 13th of June. So at this point of time, as it stands, I think we have to be cautious. And if you're thinking about opening a long position, that's personally not something I would do. I think the closure of the Strait of Hormuz, or I think further escalation, is definitely a possibility. And I'm not certain it's priced in. But if we're looking at the general financial markets at this point of time, on the higher time frames, what I've always said is that the recovery we've seen in the last 2 months has been extremely strong and great. However, we are at the previous all-time high right here. We're at a major resistance level. I think it's most likely that, especially also over the course of the summer, we will remain stable. And, if there's de-escalation, yes, then we can break out and rally up higher. But for now, I think stability is more likely. And when we're talking about stability, I'm not expecting a breakout. That means that the room to the upside to get into is much lower than the room to the downside to get into for the S&P 500, where the next main support level is around 5,750. So be aware of that, right? Be aware of that when opening positions, that I would say there's outsized returns to the downside, even though in the short term, the market still looks very resilient, right? So when we're talking about if there's no major news, if there's no news that's different from the expectation, I would say it's most likely the S&P 500 is just going to remain stable right here on top of 5,900, and that we can also expect a move into the previous all-time highs a little bit higher towards 6,100. So those are my thoughts. Those are my thoughts on the markets for now. Hopefully that helps. But that's what you'll have to work with. So thank you for watching. Have a great rest of your day, and bye.